Hello, my name is Troy Atkins, and I am the founder and owner of Atkins Capital Management. I want to talk to you today about the key housing events that have transpired in the U.S. residential housing market during the fourth quarter of 2019. During the fourth quarter of this year, a comprehensive analysis of HECM reverse mortgage loans conducted by Atkins Capital Management and the actions of the Federal Reserve as part of its Federal Open Market Committee operations were the primary topics of discussion. This movie presentation also provides an overview of the home price level for a select group of cities that make up the Atkins 60 City Home Price Index, and it provides a wealth of information for prospective homebuyers to use in order to make a prudent home purchase decision. This presentation was written, narrated, edited, produced, and published by Troy Atkins. I am the founder and owner of Atkins Capital Management. Atkins Capital Management is a privately owned and independently operated company. Our exclusive focus is on residential real estate. Our company is not affiliated with any parties associated with the residential housing industry. Our mission is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. As an investment professional, I have more than 15 years of real estate analysis experience, more than 10 years of institutional investment consulting experience, and more than 8 years of freelance financial writing experience. I am also the author of more than 25 published articles. For more information about my background, skills, and experience, please visit the Atkins Capital Management website. With this overview in mind, let me now turn your attention to the primary housing topics for the fourth quarter of 2019. During the fourth quarter of this year, the founder of Atkins Capital Management conducted a comprehensive analysis of HECM reverse mortgage loans and created a 30-minute movie presentation about these types of complex financial products. A reverse mortgage loan is a special type of loan that is used by older Americans to convert the equity in their homes into cash in order for them to be able to meet their financial obligations. Here is a summary of our findings. HECM reverse mortgage loans have thousands of dissatisfied borrowers. Almost 1 in 5 borrowers have defaulted on their loan. The HECM loan originations take-up rate is less than 1%, and the current HECM loan volume is only about one-half the amount that it was in 2010. Bank of America and Wells Fargo have exited the reverse mortgage loan business, ostensibly because they feared the risk of damage to their respective banking reputations if they foreclosed on seniors who defaulted on their HECM reverse mortgage loans. Reverse mortgage loans are expensive because they have high upfront costs and high ongoing costs. Reverse mortgage loans reduce the amount of financial assets that will be available to bequeath to the homeowner's heirs. Homeowners that are put in nursing homes for more than 1 year may violate the provisions of the reverse mortgage loan contract and therefore be forced to sell their homes. The Consumer Financial Protection Bureau has identified the lump sum distribution option as potentially risky for younger borrowers with longer lifespans because such loans place these borrowers at risk of using up their home equity early in their retirement. For many homeowners, the annual allotment of the single disbursement payment option for the reverse mortgage loan proceeds will not pay for all of the annual carrying costs that are associated with owning the home. The Government Accountability Office has determined that the Federal Housing Administration needs to improve the monitoring and oversight of reverse mortgage loan outcomes and servicing. The terms and conditions for reverse mortgage loans are complex and comprehensive and take a significant amount of time and effort for homeowners to understand. Most people have neither the financial education nor the time and interest to learn about all of the intricacies associated with reverse mortgage loans. This problem is compounded as people age and start to lose their mental capacities. Overall, there are more than a dozen material issues that should dissuade most homeowners from obtaining a reverse mortgage loan. Nevertheless, for homeowners that are facing financial peril, a reverse mortgage loan may serve as a feasible last-ditch effort to monetize a portion of the appraised value of their home in order to bolster their monthly income during their elder years. For homeowners that are financially stable and are financially astute, a reverse mortgage loan may serve as a valuable financial tool. Reverse mortgage loan proceeds have a moderate hurdle rate that can be greatly exceeded by investing the loan proceeds in the global capital markets. The annual required increase in the market value of the home is a very attractive cost for investment capital. Reverse mortgage loans provide astute homeowners with the opportunity to utilize financial leverage in order to bolster their net worth. The non-recourse clause in HECM reverse mortgage loans give homeowners a built-in put option derivative feature that is tied to the value of their homes. To explain, homeowners will never owe more on their reverse mortgage loans than the value of their homes. This put option provision limits the downside risk of reverse mortgage loans and would serve as a valuable feature if there is another housing crisis. Reverse mortgage loans exhibit both tangible benefits, such as a place to live, and intangible benefits, such as investment capital. Nevertheless, HECM reverse mortgage loans were not created in order to help investors bolster their net worth. Therefore, reverse mortgage loans should not be evaluated from this perspective. Moving away from these policy issues and events, and to an assessment of the mortgage lending environment, it is important to note that for the fourth quarter of 2019, the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan began the quarter at 3.72% and ended the quarter at 3.76%. In order to better assess the current mortgage loan interest rate environment, prospective homebuyers should remember that the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan reached an all-time low of 3.31% in November of 2012, and it reached an all-time high of 18.63% in October of 1981. In view of realized and expected labor market conditions and inflation, the Federal Reserve reduced the target range for its federal funds rate by 25 basis points to a range of 1.5% and 1.75% during their Q4 2019 Federal Open Market Committee Operations meeting. Prospective homebuyers should closely follow the level of mortgage loan interest rates in their community, because a rising cost of debt will increase the amount of interest expense that prospective homebuyers will need to pay for their mortgage loan. This in turn will place downward pressure on the price level of residential housing in their community. As a benchmark proxy, prospective homebuyers should remember that a mortgage loan interest rate of 5.3040399% for a 30-year fixed-rate loan would require the homeowner to repay twice the home purchase price if the loan is repaid on schedule and held until maturity. Now that I have provided an overview of the events and trends that have taken place in the residential housing environment for the quarter, let me turn your attention to the proprietary finance-based analytical methodology and cloud-based residential real estate analysis software application that you can use in order to provide an assessment of the price level of homes in your community. The Atkins Residential Home Valuation Analyzer is an internet-based software application that analyzes the relationship between the median home price level for a city and the median household income level for the city. With this information, the software application takes into account the most recent month-ending national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan and the assumption that no more than 28% of pre-tax household income should be spent by homeowners in order to repay the principal and interest costs for their mortgage loan. By utilizing this information, the Atkins Residential Home Valuation Analyzer can accurately assess the price level of homes in your city. From the first analytical perspective, the Atkins Residential Home Valuation Analyzer determines the level of underpricing or overpricing of homes in your city by calculating the mortgage loan interest rate that justifies the price level of homes in your city. With this information, the justified mortgage loan interest rate is compared against the national average mortgage loan interest rate in order to accurately assess the level of underpricing or overpricing of homes in your city. From the second analytical perspective, the Atkins Residential Home Valuation Analyzer calculates the percentage of household income that would have to be spent by the people that live in your city in order to justify the price level of homes in your city. With this information, the justified percentage of household income amount is compared against the traditionally accepted household income amount of 28% in order to accurately assess the level of underpricing or overpricing of homes in your city. By utilizing the Atkins Residential Home Valuation Analyzer, you can determine the level of underpricing or overpricing of homes in your community, as well as the magnitude of underpricing or overpricing of a specific home that you are considering to purchase. This in turn will help you make a prudent home purchase decision. For more information about our finance-based analytical methodology and the use of the Atkins Residential Home Valuation Analyzer, please review our finance-based analytical methodology report on the Atkins Capital Management website and watch the wealth of movie presentations that provide an overview of the Atkins Residential Home Valuation Analyzer. Moving away from these policy issues and events and to an assessment of the housing environment, it is important to note that for the fourth quarter of this year, 24 cities that make up the Atkins 60 City Home Price Index were classified as overpriced for the quarter. San Francisco, Los Angeles, Honolulu, New York City, and Boston were identified as the 5 most overpriced cities in the index. In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities by reducing the 30-year fixed-rate mortgage loan interest rate amount from 3.76% to 0%. Therefore, in order to classify the homes in the top 5 overpriced cities as underpriced, it would need to be deemed prudent by prospective homebuyers to spend more than the respective justified percentage of household income amount. In order to justify the median home price level for each city, the median required household income level would need to increase to a level within the respective range of $125,931 and $272,635. Based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs of a mortgage loan, the justified home price level for the top 5 overpriced cities fell within the respective range of $291,125 and $485,016. Prospective homebuyers should use the Atkins Residential Home Valuation Analyzer in order to assess the level of overpricing of homes in their community. On the other side of the spectrum, based upon the justified percentage of household income amount, 36 cities that make up the Atkins 60 City Home Price Index were classified as underpriced for the quarter. Detroit, Jackson, Baltimore, St. Louis, and Indianapolis were classified as the top 5 most underpriced cities in the index. Detroit and Jackson were classified as the most underpriced cities in the index based upon both their higher justified mortgage loan interest rate amounts and their justified percentage of household income amounts. In order to classify homes in the top 5 underpriced cities as overpriced, the national average mortgage loan interest rate would have to increase from 3.76% to more than the justified mortgage loan interest rate amount for each city, or it would have to be deemed imprudent by prospective homebuyers to spend as much as the respective justified percentage of household income amount for each city in order to repay the costs of a mortgage loan. Given the recent events that have transpired in the residential housing market, and taking into account the fact that buying a home will likely be the largest single financial transaction that prospective homebuyers will ever make, and the bulk of their net worth will likely be tied up in their home, prospective homebuyers should use the Atkins Residential Home Valuation Analyzer in order to analyze residential real estate from 5 financial perspectives. First, prospective homebuyers should use the Atkins Residential Home Valuation Analyzer in order to assess the level of underpricing or overpricing of homes in their community. Second, prospective homebuyers should use the Atkins Residential Home Valuation Analyzer in order to assess the largest amount of money they should spend in order to purchase a home. Third, prospective homebuyers should use the Atkins Residential Home Valuation Analyzer in order to assess the amount of money they would need to earn on an annual basis in order to be able to afford to purchase a specific home. Fourth, prospective homebuyers should use the Atkins Residential Home Valuation Analyzer in order to assess total home ownership costs expressed as a percentage of household income. And fifth, prospective homebuyers should use the Atkins Residential Home Valuation Analyzer in order to assess how much a home would need to appreciate in value each year in order to offset the costs associated with owning the home. By assessing residential real estate in this manner, prospective homebuyers will be able to make a prudent home purchase decision. For more information about the Atkins 60 City Home Price Index, to watch our catalog of residential housing movie presentations, or to subscribe to use the Atkins Residential Home Valuation Analyzer, please visit the Atkins Capital Management website at residentialrealestateanalysis.com. This is Troy Atkins, saying thank you for taking the time to listen to this presentation.